Welcome to Valley of the Sun Real Estate Show. Anything and everything you need to know when it comes to your real estate needs right here in the state of Arizona.
Hello, Arizona, and welcome to this episode of Valley of the Sun Real Estate Show. I'm your host, Jason Bates, the lender who lives in and is a part of your community. And if you want to reach out to this show, I would love to hear from you. So please call me at 602-573-3101, or you can email the show at valleyofthesunrealestateshow@gmail.com. And if you want to check out past episodes, you can always check out the past episodes on my website, which is www.valleyofthesunrealestateshow.com. And if you are downloading me on iTunes or any other type of podcast hosting website, please leave a review. I'd love to have your feedback on the show, good, bad, or indifferent. So please leave a review and share with friends or family. Now, today's episode, I want to get right into this because I've compiled a bunch of questions here that you should be asking your lender when you're shopping to either refinance or purchase a mortgage. And I want to go over these questions and why you should be asking these questions to your lender. So let's jump right into this. First section here is just about the lender. You want to know more about your lender. If you're going to give all of your financial picture, if your financial background, if you will, and expose yourself to getting a loan, which already can be a pretty daunting task in of itself. But if you're going to do that, you want to be sure that you're dealing with a quality lender. And so you want to ask about that lender and what they do. And some of the questions you should be asking are you licensed in the state? Are you licensed by the state in which you're trying to apply the loan for a loan in? In other words, you don't want to necessarily get a lender that's in New York City that is lending on a property in Arizona. You'd rather be dealing with a lender that's in the state specific to the property in which you're purchasing. I know a lot of people here in Phoenix are transients, and maybe they're from Chicago, maybe they're from Los Angeles, California, anywhere, really, Colorado, and they may want to deal with their lender there locally, but you really should be dealing with a lender that's local to the property, because the lender is going to be more in tune to what's happening in where the property is located at. Who does the lender represent? Do they represent a bank? Do they represent a broker or finance company? You want to know this because with a broker, there's no exposure to them. They could pull up shop and leave tomorrow. And so there's a little bit of an inherent risk as a consumer that broker could close shop right in the middle of your transaction. You certainly don't want that to happen. What loan programs do you offer? Do you offer VA loans, USDA loans, FHA, 2-1 buy-down loans, ARM products? What types of loans do you offer, and how knowledgeable are you about each one of those products to best suit my needs and what I'm looking for? Are you going to hold the loan, or are you going to sell the loan? That's important, because if the mortgage company says that they're going to hold the loan, they're going to service that loan, meaning that you're going to be making payments directly to their company, that means that company has a much viable or much more solid financial picture than a company who may be selling that loan off. When a company sells that loan off, number one, they're susceptible to overlays. So when it comes to your financing, you can have some overlays that could make the process very, very frustrating. When they hold the loan, you know that they're financially viable in the sense that there are certain requirements for a lender to have in liquidity in order to service their own loans. So you want to make sure, in my opinion, you want to be dealing with a lender who's going to be servicing your loan. So when they make the underwriting decision, you know that they're essentially lending their own money, if you will, in a way, that they're going to make the right decision when it comes to getting your approval. And your approval is going to be a little more solid in that aspect as well. And then also, obvious here, you want to know what kind of documents you're going to need from me as a consumer to fulfill the loan obligation. So what kind of income documents are required? What kind of back taxes are required? That sort of thing. Assets, anything that you may need to qualify for that loan. And that's important because some lenders require 2 years tax returns, some only require 1. And so you want to know exactly what you're up against when it comes to the documentation that you'll need to provide the particular lender. Now, if it's a lender and not a broker, then you're going to want to ask some slightly different questions. And one of those might be, is there someone I can talk to whenever I need to? How available are you to answer my questions? Are you available, after hours, over weekends? What's your availability to help me in answering my questions? How are you going to keep my personal information secure? With identity theft, a big problem in this country, and it's really hard to catch these people, unfortunately, when they do steal your identity. Remember, when you're doing a mortgage loan, there's a lot of information, personal information that you're going to be giving the lender, and you want to make sure that information is going to be secure, and it's not going to be sold or transferred or just laying on somebody's desk, for somebody to walk by and steal. So you definitely want to make sure that your information is secure, and ask them that. Don't be afraid to ask them that. It's your credit report, and it's very important you protect that credit report as best you can. And that goes into, do you sell my information? Is it somebody else that, some other kind of solicitation companies that you would sell the information to? Now, as far as a broker goes, some additional information or questions you may want to ask if they end up being a broker. Now, brokers, I want to make clear here that brokers aren't a bad thing necessarily. A lot of brokers in California, for example, where mortgage lending isn't as popular. And the reason for that is because the loan amounts in California are much, much higher. And so when you have a mortgage broker, they have access to a lot more jumbo products, for example, where a lender, because of the liquidity requirements, may not have access to all jumbo type products. So mortgage brokers are not a bad thing. I want to be perfectly clear on that. But you just want to make sure that if it is a mortgage broker, that it's one that's going to be solid and one that is going to be, around and in it for the long haul for you. As a mortgage broker, you want to ask them, how often do you get paid, or how do you get paid? Do you get paid up front? Because if they get paid up front in the loan, then they may not be as in tune to making sure that your loan closes and is urgent. There may not be that sense of urgency there. So you want to make sure that they're going to be there, again, for you with the long haul or in the long haul, and make sure that they don't, forget about your situation and your needs, for example. How much will you make on the loan? And don't be afraid to ask that question. How much will you make on this loan? And who are some of your top lenders? Who do you sell your loans to? The reason I asked, I point out, how much will you make on this loan? If they tell you that they make, 1 point, 2 points, whatever, the higher the point percentage, then that just means that you could have gotten a better deal somewhere else. Now, I'm not saying that person, that broker, doesn't deserve to get paid. Absolutely, they deserve to get paid. But there comes a point where it's a bit ridiculous. I've seen some brokers that get paid 3 points on a deal. Now, are they going to tell you the truth when it comes to how much they're going to get paid on the deal? Probably not. But you're going to be able to gauge on how quick they respond to your question, or whether or not this is somebody that's trustworthy. So it's not necessarily just the answer that you're going to get from the broker, but it's also going to be how they respond and how open they are to responding to that type of question. That'll give you a good sense of their character and what they're all about. And then who are your top lenders? Who do you sell your loans to? If they sell a lot of their loans, a big portion of their loans to a particular company, let's say Wells Fargo, for example, what happens if Wells Fargo decides to no longer purchase those loans from them? What alternatives do they have as a backup to your situation? You don't want Wells Fargo pulling out, and this has happened many, many times. You don't want a company like Wells Fargo pulling out in the middle of your transaction, and now all of a sudden that broker cannot place your loan with another institution. Now, I will say most brokers have at least two options when pre-approving a loan. Most of them. Not all of them, but most of them. And it's for that very simple reason that if that first lender decides to pull out and not accept any more transactions from that broker, then that broker has an alternative to place that loan somewhere else. So most of them do, but you want to be sure that they have that kind of fail-safe in place for you. Now, about the loan, you want to ask some questions, particularly about your loan. What is the interest rate you're offering, and how did you arrive at that? How did you get to that interest rate? what the credit score, the debt to income ratio. You want to know what factors played into getting that credit score. There are overlays within the Fannie Mae, Freddie Mac guidelines, FHA guidelines that have adjustments to interest rate based on risk. But then there also are adjustments for the particular lender that they may put on top of those layers of risks set forth by Fannie Mae, Freddie Mac, and HUD that they may also have to their portfolio. So you want to go over those layers of risks and see if your loan or how your loan fits into that layer of risk. How do you know it's the best rate? So the only way you're going to be able to do that, or how do I know this is the best rate? So you want to ask your lender, how do you know that that's the best rate that I can get? Do they shop? Are they competitive? I always shop my competitors against myself to see how competitive I am. I want to stay in tune with what's happening out there in the marketplace. And if I'm way out of whack, one way or, in a negative way, if I'm way out of whack in a positive way for the consumer, then I'm good. But if I'm way out of whack on a negative way to the consumer, then I want to make sure I contact my secondary department to make sure that I get that more in line with what the marketplace is offering. How will my rate change over the life of the loan? Especially, you want to ask that question, especially if it's an ARM product or adjustable rate mortgage product. If it's a fixed rate, there's not going to be any change to that. But if it's an adjustable rate, especially on the COFI or COSI type loans, cost of savings index, cost of funds index, you want to make sure that you understand how that rate will change over the life of the loan. If it's an adjustable rate mortgage, what is the worst case scenario that you may face with the interest rates? If the market was to tank, what's the worst possible scenario that you would be paying as far as an interest rate goes? You want to ask that question of your lender and see what their response may be. Are you locking in my interest rate, or how do I lock in my interest rate, and how long can I lock in my interest rate for? If I lock it for a long period of time, does that cost me any money? Is there any upfront cost associated with locking the interest rate in? Those are all questions you want to ask when locking in the interest rate. Can you or could you estimate my closing costs for me? You want to try to get that up front as best you can. Now, it's not always easy, especially on a purchase when you don't necessarily know the exact sales price of the home. Most brokers, though, or lenders, will be able to give you kind of a rule of thumb, if you will, on your closing costs. And a general rule of thumb, at least here in Arizona, is about 3% of the sales price is a pretty good rule of thumb as far as closing costs go. Now, if it's a lower loan amount, in other words, if it's a $50,000 loan amount, then that percentage is going to be higher because there are fixed costs associated with a loan. But if it's a $500,000 sales price or loan amount, then it's going to be less than 3%. So just kind of keep that in mind when asking that question. It's all going to be in perspective with your loan amount. Can you explain the APR? What is my APR for this loan? What does that entail? What does that make up? What am I paying any points on this loan? If I lock in the interest rate, are there any points associated with this loan? What are my monthly payments? Not just with principal and interest, but with taxes and insurance. You can go on, or lenders, the good lenders anyways, can go online and look up the taxes for a particular property. So you can get pretty specific when it comes to the taxes. The only variable maybe is the homeowner's insurance, because that depends on the types of coverages that you as a consumer are going to want on your homeowner's insurance. Here in the Valley, in Arizona, the average for homeowner's insurance is about $720 a year. So it's about $60 a month added to your payment. And then your taxes here, property taxes, as a rule of thumb, are about 1% of the sales price. So a $300,000 home, then your property taxes are about $3,000 a year. Now, I know everybody everywhere else across the country can be a little jealous of that because property taxes in the Midwest and the East Coast are super expensive. Same with in California, super expensive. But here in Arizona, property taxes for the West Coast are very, very cheap, and that's what makes Arizona so attractive when it comes to real estate, because you can end up purchasing more home and more of your monthly payment goes toward the value or the purchasing power of the home rather than going into taxes. Are there any prepayment penalties associated with my loan? Now, in today's market, I haven't had one, and I've been doing this for a long, long time, but I haven't come across one product that has a prepayment penalty. So, but if it's a hard money deal or some other type of alternative financing, and that alternative financing is becoming a little more popular here, we're starting to see more and more of that, come to the surface here. You want to ask if there's going to be a prepayment penalty associated with that. But your typical Fannie Mae, Freddie Mac, HUD, USDA, VA, you're not going to have a prepayment penalty. If there is, you need to find another lender ASAP. For reverse mortgage, if you're looking in the reverse mortgage arena, who will you be working with after the closing? On a reverse mortgage, you're going to get payments mailed to you. So who is that going to be? And is there somebody that I can contact to if I have any questions about the payments or about the loan in itself? Reverse mortgages are a little tough on the servicing side because reverse mortgages are not the norm. It's totally opposite of what most people associate a mortgage with. But reverse mortgages do require a lot more servicing, a lot more customer service when servicing those loans. So you want to make sure that you have a point of contact and somebody that can really answer your questions, because it can be a little bit confusing after you close. What's your timeline? How quickly can you close this loan? What are your current turn times and underwriting? Do you underwrite in-house? How does that all look, and how does that play out? Because you want to get all that information so that you can plan your life accordingly, especially if you have to give out a lease or get out of a lease or give your landlord a notice or something like that. You want to know these time frames from the lender, and you want to kind of ask them, if you had to do it quickly, how quickly could you get it done? Easy for me to say. And then if not, what's just a normal standard? If we were just going through the motions, what would be the normal process time for a mortgage? Here in Arizona, typically it's about 30 days. Other parts of the country, it may be different. So you want to be sure that you kind of nail that down with a lender on their turn times. So there's quite a few questions that I've kind of assembled there to help you with your process. I hope that you can get the right loan that you're looking for, and I hope these questions will help answer some of the concerns that you may have when shopping for a mortgage loan. But if you write these questions down and you ask these of your lender, you're going to go into the transaction a lot more educated and a lot more confident that you're going to be able to get the home of your dreams. And that's what this is all about, is helping you get the home of your dreams. So until, if you have anything in the future that you would like for me to talk about, please email the show. I would love to talk about it. Email the show at valleyofthesunrealestateshow@gmail.com. Or even better yet, you can call me at 602-573-3101. I'd love to talk to you. Even if you're out of the state of Arizona, I'd love to talk to you. So until next time, I hope you got some value out of this. And you can always go to my website. Almost forgot to plug that, which is www.valleyofthesunrealestateshow.com. Almost forgot the .com. I almost thought it was .co, but it's .com. valleyofthesunrealestateshow.com. So until next time, happy house hunting, and I hope to hear from you soon. Take care. Bye-bye.
Jason Bates, NMLS 220798, Mortgage Banking License 0119128, Equal Housing Lender, Sound effects provided by soundwave.com.